So when you're Betfair trading, what's the number one thing that you must have right in order to be able to trade profitably? Is it money management? Is it strategy? Well, you know what, actually, I think it's this. I think it's your brain. I think if you have the right mindset, that will give you a good head start in terms of deploying whatever strategy you choose. Please like and comment on the video below. That will allow me to produce better quality videos and more of them in the future. If you're interested in learning to trade successfully on sports, then why not visit the BetAngel Academy, where we have more detailed videos. So yeah, let's have a look at this spreadsheet and understand what we're looking at here. Well, the key things that you can see on here are the win rate. We're basically saying this is the strike rate. We're winning twice as much as we're losing, which means it's a good strategy. Up here is telling us, in fact, I should explain this bit here, numbered from 1 to 10. These could be individual trades, it could be markets within an individual day, it could be months. It could be January to October in this particular example. But basically we've got a sequence of events that are occurring and we're going to win or lose money on those. But I've also thrown in the scratch as well. I'm saying that scratch is break even. You know, we don't win nor lose, but we obviously can have winning trades and we can have losing trades within this iterative sequence. So we're basically saying that that sequence could be anything, but we've just numbered it 1 to 10. And we're going to look at what happens on each of those individual periods within this particular market. The bottom number here is how much we're up. So if we look at the example that we've got in front of us here, this was a good sequence. We actively traded, bet, whatever you want to do. We've actively participated in this sequence. We started at 0, and by the end of that sequence, we'd made 7 units effectively. We'd done really well. And you can see here, we scratched the first and then win, messed up there a bit, but ended up okay overall. So at the end of this sequence, you'd probably be feeling pretty happy and you think, well, I did a really good job there. And this is how most people think that trading works, but it doesn't. Trading messes with your mind. And that's where it unravels a lot of strategies and a lot of money management, because people start to alter what they're doing based upon the results that are in front of them. Now, the fact is this spreadsheet has been designed fairly randomly. So the idea is every time I press the button in a second, it will update all of these values. But the overall strategy itself is profitable over the very, very long term. However, over the short term, you're going to see variances up and down. So let's press F9 and see what happens on the spreadsheet on the next sequence. So let me describe briefly what we see here. 1 on the first iteration, lost, scratched, 1, scratch, 1. And then by the end of the sequence, we're back at 0. So at the end of this day, you'd sort of think, oh, I couldn't get anything right. But the fact is, this is the same as the one that we just did. It's just that over a very short period of time, you're going to see certain amounts of variability. And like I said, this could be individual markets on a particular day. It could be individual trades, or it could be a month, perhaps. But the timescale expands and contracts, but the variability within inside that will fluctuate quite a bit. It's not quite like that, because basically if you do have a profitable strategy, the longer and the more times that you do it, the more likely it is you will profit, but we're just parking that to one side for the moment for the purposes of this video. But yeah, on this day you can see we were in profit and then we lost it. So how do you think you'd feel at the end of that day? In the previous day, where it was just a string of winners, you'd think that you were a god. You'd probably go into the next day and thinking, well, you know what, I've absolutely got this sus, so I'm going to double stakes and I'm going to really go for it today. And then boom, you get a day like this. You reach the end of the day and you're still thinking, maybe I haven't got this completely sus. So let's flip to the next sequence and see what happens here. So start off with a loss, and then we get a string of winners, and then we get a couple of losers, and then the day sort of, or the sequence sort of just dies out. Or so it appears, because we're looking at it on a spreadsheet. Try doing this in real life. You get off to a bad start. You just had a naff day yesterday. So how do you think that's going to influence what you do next? Now, the funny thing is, you may think that I'm talking particularly about manual trading here. And I have to say that manual traders suffer from this much more than any type of other trader, because the emotional variance, is that a word? the emotion that bears down on them is quite strong. So, you know, great day the day before, or in that previous sequence, and then the last sequence that we looked at, not so good, and you get off to a bad start. So is that going to improve or decline your confidence? Would you actually be able to pull off a decent trade on the next part of the sequence? And then would you be able to do 4 in a row? You may start to take things a little bit more cautiously after this first one. And then, would you have got that in place? So, okay, let's assume that you did, you approached it rationally, you went through things carefully, and you went all the way through it. And then we get to the iteration number 6 on this sequence of 10 iterations, and then you can see we lose, and then we lose again. So you can imagine you were down, then you're up, and now you're on the edge of losing it all. So maybe at that point you just think, okay, I'm going to quit. I'm going to quit it here. I'm going to switch this off, and I'm just going to walk away because I didn't get it right yesterday. Not sure if I'm doing well today. I'll quit here. But of course, you can see everything ended up fine at the end of that. Now, I just said about manual traders suffering from this more than anybody. And self-doubt and fear plays on their minds significantly. And the funny thing is, with automation, this can happen as well. So on my laptop here, I turned instinctively and looked to my left here. I have a laptop with VPS installations on it. And what I can do is, while I'm trading manually, I can just flick backwards and forwards on my MacBook just to see how the automation's doing. However, I desperately resist the temptation to do that. Why? Because you then insert the emotion into that. If you started here, you fire it up in the morning, you look at everything that it's doing, and what you should do to have completely unbiased, unintended consequences is you look at it at the end of the day and you go, oh, I'm 2 up today, it broke even yesterday, and it made loads of money the day before. So yeah, it's all going well. If you look at it mid-session and you can see that it was up heavily and then it started to slide away, then you may be tempted to think, maybe I've got this wrong, and turn it off. So yeah, the temptation to get involved is great, but you can't let yourself do that, because what you need to do is have a very clearly defined strategy, very clearly defined money management, an execution of that, maybe even a set sequence of events that occurs as you execute, and then you just repeat it relentlessly. You don't modify your behavior as you go along. But nearly everybody does. If things are going really badly, people get wound up a bit, get emotional, and that accidentally influences what they're attempting to do. When in fact, the core strategy is fine. If you look at this spreadsheet is generating these numbers randomly. These are not actual sequences. It's just doing it at random in the background. And if I press F9 again, we'll get a different set of results. So, oh dear, it had an absolute shocker here, but maybe not as bad as it could have been, because it was -3 at one particular point. And here, a fantastic, a wonderful day. But of course, this is just refreshing this data randomly using a random seed generator and applying it to this particular win rate. But can you see the wild variance that we get on an individual basis? That's what people have real problems coping with, whether it's in a predefined strategy that people are using, whether they're manually trading, automation. Everybody experiences these. But the fact is, what you have to do is you have to go right down the line. When you win lots of money, you don't sort of suddenly go, right, oh my God, I'm massively increasing stakes. And when you lose money, you don't think, oh no, I've lost it. I'm doomed. Oh, this is terrible. Everything's changed. The world has ended, No, you just have to be really, really consistent. And it helps if you don't check on what's going on during the day. So I'll turn up to a trading session, I'll have a look and I think, oh, this looks good, or well, I'm not so, I don't think it looks particularly good. I'm trying to form an opinion based upon what my experience on how I think the market will trade and what it will deliver by the end of the day. But one thing I am absolutely not doing, and you should not do it too, is set a target. If you set a target, you ratchet up these emotions massively and you put immense amounts of pressure on yourself, and you will fail if you set targets. So my objective when I look at any market with any strategy that I deploy in any way is I set no target. I just think, right, we're going to do absolutely the best that we can. We're going to go through this entire sequence from start to finish, whether it's 10 trades, 10 markets, 10 months or whatever. And then at the end of that, we can actively review and see how things changed or didn't change, or what the actual result was. If you count it on a bit by bit basis, it's going to mess with your mind. And that's really, really hard to cope with. And I think that's one of the things when you're looking at the ladder and the prices are going tick, 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 and jumping up and down and doing stuff. People often do that. They sort of think, oh, I'm at a loss. Profit, loss, 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 profit. Ah, it's going great. No, it isn't. Oh, it's terrible. And it's a disaster. So if you look at the way that I trade on the ladder, you'll notice that I'm looking for generalisms. I'm sort of saying, well, I think this is going to happen. That's going to happen. Roughly going to be about here. Because if I worry about every single tick increment that's going on, I'll have a heart attack within a couple of weeks. And you don't learn any information from it. It's noise. So you have to see through that noise, and you have to just focus on doing the best that you can at that moment in time. And then whatever you end up with at the end of that sequence, some of it was a little bit down to luck. But if you do it for long enough, then the strategy will shine through and you will be able to make money from it. However, attempting to measure targets, getting emotional about individual stuff doesn't work. If you have a great trade, don't credit yourself too much. And if you have a terrible one, don't deride yourself too much. Just keep ploughing along that path and deploying the strategy as sensibly as you can. And that will work out for the better over the long term. But the funny thing is, loads of people just cannot and will not do that. And that is a function of the way that the market works. So yeah, don't set targets, keep your focus, and focus on not only the strategy that you're using and the money management, but the execution as well. And if you can do all of those three things, then you'll have a profitable strategy and you'll be a profitable trader.